Welcome back to the War Room. Imagine trying to regulate, a decentralized multi-billion-dollar cryptocurrency exchange using a rule book that was originally typed out on a manual typewriter back in 1961.
Right, which sounds absurd, but that has essentially been India's regulatory reality for the past decade, well, at least until February 13, 2025.
Exactly. And that date is huge because that is when a massive structural pillar of Indian governance shifted. They introduced the Income Tax Bill 2025.
Right, which completely replaces the 64-year-old Income Tax Act of 1961. It is a massive overhaul.
It is. And, for you listening, whether you are gearing up for a major civil service exam or maybe you're prepping for a high-level corporate strategy meeting, you just cannot afford to have a surface-level understanding of this. This deep dive is designed as a high-yield strategic briefing. We are looking at the critical bridge between a legacy financial system and a fully modern digital economy.
Yeah, and to really grasp the gravity of this transition, you have to look at the background layer. The structural problem the government was trying to solve. I mean, the 1961 framework was just fundamentally misaligned with how a 21st century digital economy actually operates.
It was a paper-era law, basically.
Exactly, a paper-era law trying to manage an algorithmic world. And because it was so bloated, it was inherently litigious.
Highly litigious. And let's actually look at why that was the case. It wasn't just because, people wanted to avoid paying taxes. It was because the text itself was just a complete labyrinth. Under that old system, a single misplaced comma or some ambiguous clause could literally tie up a startup's capital in appellate courts for, 5 to 7 years.
Oh, easily. When tax law relies on that dense, sprawling legal prose, every single word becomes open to interpretation by lawyers on both sides. So the government rationale behind this new 2025 bill is to, force the legal framework into alignment with international best practices. It aims to drastically reduce that compliance burden by basically stripping out those interpretive gray areas. It's about enhancing transparency.
Okay, so if you are listening and building an analytical foundation for an exam answer or a policy draft, you need hard data. Vague assertions like, things got simpler, just don't score points. So let's lock in the facts and data memory layer. What are the quantitative anchors we need here?
So your first anchor is the implementation timeline. The bill was introduced in February 2025, right? But it is currently sitting with a parliamentary committee for amendments. The crucial target date for it to come into effect is April 1st, 2026.
April 1st, 2026.
Got it.
And looking at the sheer physical volume of this new bill, it feels like the government basically Marie Kondoed the tax code.
They absolutely did. I mean, they took a very sharp axe to it. The word count was literally slashed by half.
Wait, half?
Yes. We're going from 5.12 lakh words in the old act down to just 2.60 lakh words in the new bill.
Wow, that is a massive reduction in legal density. I mean, the updated 1961 Act was, sitting at 823 pages?
Yep, 823. And the new bill is 622 pages. So you're looking at roughly a 24% drop in sheer paperweight.
But I assume the more important shift isn't just the page count, right? It's the structural mechanism they use to get there.
Precisely. Think of the old act like a massive, disorganized physical filing cabinet where you have to, cross-reference 5 different folders just to understand one single deduction. The new bill operates much more like a streamlined, hyperlinked spreadsheet.
And that's because of the tables, right?
Yes, the visual simplification. The old act had 18 tables. The new bill bumps that up to 57 tables.
Let's unpack that mechanism for a second. Because usually people think more tables means more complexity. Why does adding tables make a law simpler?
Because rigid visual logic basically eliminates debate. Instead of burying the rules for things like tax deducted at source TDS, which is the tax collected from your paycheck, instead of burying that inside 3 pages of dense legal text, you put it in a grid.
Right, making it instantly readable.
Exactly. If you are X type of business making Y type of payment, your rate is Z%. You do not need a senior litigator to interpret a grid. It maps out slabs, deductions, and TDS rates visually.
Which brings us to the terminology shift, which I love. Anyone who has ever studied this framework knows the absolute headache of trying to figure out the difference between the assessment year and the previous year. It always felt like you were doing mental time travel.
It was awful. Those terms were relics of a slower processing era. Back when everything was on paper, the state needed a distinct previous year for when you earned the money, and a separate assessment year for when the tax officers physically sat down to calculate it. It was, a major source of confusion, especially for foreign investors.
And now it's gone.
Gone. Officially replaced by a single logical term, tax year. It aligns with global standards and just prevents interpretational disputes right out of the gate.
Okay, so let's pivot to the government response framework. How is the government actually executing these changes across policy, tech, and governance? Because a massive misconception I've seen is that a new income tax bill automatically means new tax slabs or rates.
And we really need to clarify that immediately. The IT Bill 2025 explicitly does not alter existing tax rates or introduce new taxes.
Right, because that remains the job of the Annual Finance Act, the budget.
Exactly. So if they aren't touching the rates, the entire focus of this bill is structural reform and ease of compliance. Take capital gains, for example. The bill revises the capital gains tax structure to create a much clearer classification for transparency.
And we also see a big policy response for newly incorporated startups and MSMEs, right?
Yes, very targeted. It offers relaxed compliance norms and specific tax exemptions for a defined early period. The whole goal is to reduce their initial operational burden so they can focus on, actually scaling their business rather than surviving an audit in year one.
Which is huge for state capacity building. And speaking of governance reform, there is a dedicated taxpayer charter introduced here. Now, historically, charters like this can sometimes just be toothless mission statements. How is this one different?
Well, because it's embedded directly into the legislation, it outlines very specific rights and responsibilities. The state is basically legally mandating fair treatment and setting a framework for grievance redressal. It's an acknowledgement that tax collection needs to function as a public service, not just state extraction.
And we see a similar attempt at clarity with nonprofit organizations, the NPOs. Historically, NPO taxation was one of the most heavily litigated areas of Indian law.
Highly adversarial. You had charitable trusts losing their status over minor procedural lapses. So consolidating all NPO regulations into one entirely new, simplified chapter is a direct attempt to stop that friction.
Okay, but driving all of this, the visual tables, the MSME exemptions, the charter is the technology layer. You can't write a 2025 tax code without integrating modern tech. We're looking at pre-filled tax returns, standardized reporting, but the absolute centerpiece here is the AI-driven faceless assessment.
That is the mechanism that changes everything.
Walk us through that. How does an AI faceless assessment actually operate? Why does it matter to our listeners?
Under the old 1961 system, if your return was flagged, you or your lawyer had to physically go down to the local income tax office. You sat across a desk from an assessing officer.
Right, which created bottlenecks and, inevitably, opportunities for rent-seeking or corruption.
Exactly. A faceless assessment completely severs that physical human link. When you file now, it is anonymized. It's processed entirely by artificial intelligence or assigned to a random team anywhere in the country. The AI cross-references your income with thousands of data points, bank transactions, GST filings, credit cards. If it matches, real-time refund. If there's an anomaly, it generates an electronic query.
No one knows whose desk it lands on.
Nobody. It prevents delays and enforces honesty on both sides.
Okay, so if we pull back from the specific mechanics and move into our significance analysis, this strategic interlinking engine, we have to connect this to broader national themes. We don't want to look at this in isolation.
Right. If you trace the trajectory of recent governance, the IT Bill 2025 is a textbook manifestation of three recurring patterns: ease of governance, digital India, and trust-based governance.
And I want to tie that into technology and economic security, because one of the most fascinating provisions here is how the bill treats cryptocurrencies, NFTs, and virtual digital assets, or VDAs.
They are formally recognizing them as capital assets.
Right. And instituting a GST-like compliance system for digital transactions. Now, this isn't just the government looking for a new revenue stream, is it?
Not at all. If we connect this to the bigger picture, this is a critical strategic pivot. Tracking digital and crypto transactions is a vital component of national economic security. By creating a heavily monitored compliance system for VDAs, the state is combating the shadow economy.
Bringing it into the light.
Exactly. It mitigates the risks of untraceable capital flight and terror financing that thrive in those regulatory gray areas.
But wait, this is exactly where we have to introduce our critical evaluation layer. Because a bill this sweeping, one that marries AI surveillance with taxation, just cannot be flawless. And looking at the sources impartially, there is a massive red flag regarding the expanded definition of what they're calling the virtual digital space.
This is undoubtedly the most significant friction point in the entire document.
Right, because under the new bill, taxpayers under investigation must provide access to a hugely expanded list of digital records. And it's not just banking software. The text specifically mentions email servers, social media accounts, cloud servers, online platforms. I have to play the skeptic here. Isn't this a massive surveillance and digital privacy risk?
Your skepticism is completely warranted, and if you are evaluating this critically, this is the primary challenge you must highlight. The government's need for robust anti-evasion tools is directly colliding with very realistic ethical concerns regarding privacy.
So how do we structure that critique objectively?
You structure it around three core limitations. First, exactly what you said, privacy infringement. The potential overreach into personal digital lives requires stringent safeguards. Without them, taxpayers are vulnerable to excessive scrutiny.
What's the second limitation?
A paradoxical lack of penalty reforms. While the bill lowers penalties for voluntary disclosures, which is great for trust, it lacks major structural updates to the broader enforcement mechanisms. They modernize the front-end compliance beautifully, but the back-end penalty structure is lagging.
And the third challenge?
Federal and structural ambiguity, specifically regarding the old tax regime. The total exclusion of the old tax regime slabs from the 2025 bill raises serious questions about its future viability. Is it gone? That ambiguity leaves taxpayers in a state of uncertainty.
Okay, this is perfect. Now let's move to the answer writing conversion. Let's say I'm sitting down to draft a policy brief or a 250-word exam answer tomorrow. I need to distill this into an actionable framework. Walk me through the structure.
All right, start with your context. You state clearly that the IT Bill 2025 replaces the 1961 Act to align with a formalizing digital economy.
Okay. Then I move into the dimensions, the body paragraphs.
Right. Structure this around three pillars. First, structural simplification. You deploy your quantitative anchors here. Word count halved to 2.60 lakh, pages reduced to 622, and the expansion to 57 visual tables.
Got it. Second pillar.
Digital integration. Here you highlight the AI faceless assessments and the VDA crypto tracking for economic security. And your third pillar is trust-based governance, where you cite the taxpayer charter and the NPO clarity.
But I need to balance that with the challenges.
Yes, your next section is challenges. You specifically discuss the friction between state capacity and digital privacy. Quote, the virtual digital space access issue and the ambiguity around the old regime.
Which naturally leads into the way ahead, the recommendations. How do we solve this?
Your conclusion focuses on institutional strengthening. Recommend utilizing the parliamentary committee review to build institutional safeguards for privacy. Emphasize the need for clear regulatory guidelines and strengthening the IT infrastructure to handle these real-time AI refunds seamlessly.
That is an incredibly tight, high-scoring structure. Before we wrap up, we need to lock everything to the listener's memory. Let's do our final revision capsule. Hit me with the 5 must-remember facts.
Fact 1. Introduced February 13th, 2025. Fact 2. Effective date target is April 1st, 2026. Fact 3. Volume reduced to 622 pages, heavily utilizing tables. Fact 4. The unified term tax year is official. Fact 5. Formal recognition of VDAs and crypto.
And what's the one probable question listeners should prep for?
Critically evaluate the Income Tax Bill 2025 as an instrument of digital governance and state capacity.
Perfect. Give me the 5 analytical keywords to underline in that answer.
Faceless assessment, virtual digital space, taxpayer charter, ease of compliance, and trust-based governance.
All right, bring it home. Give us the 30-second summary.
The IT Bill 2025 marks a definitive transition from an archaic 1961 framework to a streamlined, AI-driven digital taxation system. By halving legal complexities and integrating digital assets, the state enhances ease of compliance. But the ultimate success of this legislation hinges entirely on balancing unprecedented digital enforcement capacity with rigorous privacy safeguards.
Fantastic breakdown. For everyone listening, as you finalize your notes, I want to leave you with one final provocative thought to mull over on your own. As our economy becomes fully digital and our entire financial footprint becomes traceable, how will future governments balance the ultimate administrative efficiency of AI tax collection with the fundamental human right to digital privacy? Thank you for joining us for this deep dive.